All right, today we're going to discuss classified financial statements, more specifically, a classified balance sheet. So, our balance sheet is going to change again. So, it's not going to change much because we know a couple of things. Now, at the beginning of the year, I started talking about how assets were classified, right? One first by liquidity and then by useful life. So what a classified balance sheet is going to do is it's going to classify the 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 assets into two groups: current assets, and current assets are liquid assets, and the second group is fixed assets. And fixed assets are the ones we have been grouping according to useful life. Now, a classified balance sheet also classifies liabilities into two groups. One is current liabilities, and the second one is long-term liabilities. Now, current liabilities are liabilities that have to be paid within the year, and long-term liabilities are liabilities that don't have to be paid for over a year. Okay? Now, current assets that fall under the classification current assets include cash, stocks and bonds, accounts receivable, and prepaid expenses. Now, remember, prepaid expenses are assets. They're our money until they've been used up, right? Now, fixed assets are assets which cannot be converted into cash very easily, right? So land, building, equipment, delivery truck. Now, we've been listing them according to useful life anyway, so this is not a big issue. Now, as mentioned, current liabilities are liabilities that don't have to be paid within the year. So accounts payable, salaries, loans, they all fall under current liabilities. Long-term liabilities, okay, are liabilities that don't have to be paid for at least a year. Now, you'll notice that I've put loans in both categories. Now, if loans have to be paid within the year, they're going to be current. If the loan doesn't have to be paid for over a year, it would go under long term. Always assume that it has to be paid in over a year. Okay, so you will always put it in long-term liabilities. Now, I'm going to scroll down to the bottom of the note, and I'm going to show you an example of a classified balance sheet. All right, so here's our classified balance sheet. All right, so you'll notice that the title still stays the same. You'll still have assets, but they'll be broken up into current and fixed assets. Okay, and you'll have subtotals for both, and then finally get a total for the total assets. Okay, same goes for liabilities. You'll have current liabilities and long-term liabilities, and then a total for total liabilities. Okay, and that's the classified balance sheet. Now, we're going to go back up for a second because we have to discuss a couple other things. All right, so another thing we can fill out is something called a statement of owner's equity. And the statement of owner's equity is going to be easy for you as well, because it's just the owner's equity section that you have been completing on a balance sheet on a separate piece of paper. So, all right, so I'll show you an example. Okay, it looks like this. So again, it's a very small statement. So it's just the owner's equity section of a balance sheet on a separate piece of paper. Now, if you complete a statement of owner's equity, okay, when you make your owner's equity section on a balance sheet, it's only going to be one line long. So you'll notice that I've completed a statement of owner's equity for this particular company, and the ending capital is $91,630. So when I go down to the balance sheet for this company, the owner's equity section is only one line long, $91,630 per schedule. Because if someone looks at this balance sheet, per schedule is telling them that the full owner's equity section has been completed on a separate piece of paper. All right, so again, if you make a schedule of owner's equity or a statement of owner's equity, then your owner's equity section on your balance sheet is only going to be one line long. Okay? Now, if okay, here's an example of a classified balance sheet. Now, this is probably your best example for completing a classified balance sheet because it shows how to deal with accumulated depreciations. Okay. All right. Now, in this particular example, you'll notice that a schedule of owner's equity was completed. Okay, so that means that my owner's equity section on my balance sheet is only going to be one line long because the full owner's equity has been calculated elsewhere. So if you look at this example, you'll notice that, okay, owner's equity is only one line long. Now remember, okay, accumulated depreciation is a contra asset account. So accumulated depreciation equipment is going to be reducing equipment. So the book value of the equipment is $8,000. Okay, so you're going to show how accumulated depreciation affects equipment on the balance sheet, right? So you're going to include it, and you're going to show the deduction on the balance sheet. So car less accumulated depreciation, car, okay, 16,000. So total fixed assets in this case is 104,000. All right.